So that's interesting because in Florida, like a lot of people are attracted to Florida because we don't have certain taxes. However, a tax that's invisible is property insurance,
Exactly.
that a lot of people might not be aware of or ready for when they, consider the actual cost of living here in South Florida.
Yeah, a lot of people have this misconception that it's been said to me many times. You have to have insurance. I have to have insurance. Why do you have to have insurance? Isn't that the law? No, it's not. If you pay cash, you can do whatever with the property you want. But if you do want to protect your assets, if you are that kind of person, it's going to cost.
Right.
Some people say, okay, I'll weather part of the, the costs because I've got money in the bank. There's, a lot of different people's thoughts to what Florida's insurance is, but you're right. It makes a whole mess when you have no idea what you're walking into and you're down here and you're going to buy a house. And it affects your DTI. Yeah. Debt to income ratio.
Yeah, and that's something interesting that you talked about when it comes to, like what's legal and what's not. So, I mean, somebody that bought their house cash doesn't necessarily have to have insurance. That's their decision. But how is it for somebody that has a mortgage on their house? They go to a bank, I don't want to give anybody a shout out here, but just a big national company. They use Rocket Mortgage, for example. Who's sponsoring this video? I'm just kidding. But
we wish.
We're getting paid in this,
right?
How does that work? Can I buy a house, get insurance on it, and then cancel my insurance as soon as the transaction goes through?
Because generally what happens is the bank wants to be covered for the money that they're outlaying for you to buy this house, right? Okay. So they want to make sure it's protected. And whether you're paying $2,000, $3,000, or $8,000 or $9,000, that'll be in your escrow. They'll want to be a listed named insured. So if you decide to cancel your insurance after you buy the house, they get a notice that it's canceled. Right. And if you think you're getting away with something, what they do is they go, oh, but we have to protect our assets. So we're going to put force-placed insurance on it. Okay. And that's going to cost you 2 to 3 times what your insurance just costed you.
So of course, you'll never save money. There's no way to actually save in regards to, never mind.
That's okay.
I was like, where am I going here?
I think I knew where you were going, but I will say this, just like your industry is highly regulated. The Florida insurance industry is highly regulated too. Okay. I have to be licensed. I had to, pass a test. I had to take ethics. I had to be fingerprinted, right? I have to play by the laws of the state of Florida in regards to insurance. So do the carriers, the admitted carriers to the state. Got it. There's a high bar there on what they can do and what they can't do. They have to ask permission to raise their rates or lower their rates. They have to present data to the state of Florida and get permission from the state of Florida that they could do either. To change guidelines that we live by of how, we take things, it takes an act of God basically to change the language of the state of Florida, because most of the policies from every single carrier are the same. It's a standard policy, but if they want to change something, like have the ability to have limited water instead of full water damage, say your tub overflows or whatever, they have to ask the state of Florida. Okay. And another thing a lot of people don't know is the rates are established between the carrier and the state of Florida. I live by those rates. I can't say, hey, you know what? I've worked really hard on this. I'm going to add $500, $1,000 to my commission. It doesn't work that way. Okay. I've worked in sales for years and years and years with commission sales and things like that. That isn't this. And it doesn't make any sense for me to go to a carrier I might make more of a commission with, because I have, the problem is I might lose you, but I want the best for you. So I'm always going to give you something to cover your asset properly at the best price possible for your pocketbook. There's no other reason for me not to do that. Gotcha. Because that's how I'm invested into this business. And a lot of insurance agents too, we can't play with the pricing.
Okay, that's interesting. I've always wondered, how going from one agent to another agent may save or cost more money or something like that.
That's a good question, because it's called appointments. Appointment with the carriers in the state of Florida. A lot of agents or, agency offices, like say with Progressive, you call Progressive, all they're going to sell you is Progressive. Right? Mm-hmm. Or you call Geico, they're only going to sell you Geico. When you call me, I'm either going to have a ton of appointments with different carriers in this state, which we have hundreds. Okay. You know, we're a franchise. We have several offices. The owners have, you know, gone out there and got the appointments that we need to conduct business in the state of Florida. But sometimes the difference is the agent has the appointments or they don't have it. Okay. You might have a guy that only has 3 appointments or 1 appointment or 10 appointments. Okay. You know, not in South Florida necessarily do we have a lot of options, but we have a lot of options.
So what are appointments?
Appointments are to the carrier. They have to approve us.
Got it.
And we're approved with them for X amount of time. I can't remember. Was it 2 years? Is ringing a bell. And, you know, they want to know our background. Okay. Who are they dealing with? They want to see our loss ratios. You know, got it. Who are we selling to? What's your, you know, got it. Okay, are you paying attention to what you're doing, what I'm doing?
So the insurance company who basically makes their money based off of risk is also not only looking at the homeowners and looking at their history, they're also looking at the agent or the agency to then say, hey, is this an agency that's going to charge a high percentage of their clients? Are they coming in and pulling insurance claims that are, you know, potentially fraudulent or whatnot, or just a high rate? So that's interesting.
That's perfect. That's interesting. That's so perfectly said.
Everything in the insurance agency seems like well thought. You know, they know their numbers, they know their data. And I'm sure they're also highly regulated by the government as well, just because there have been some insurance companies that have gone under.
That's another funny point.
Okay.
It's usually the state of Florida that put them under.
Really?
Yes. Okay. Because if the state of Florida is looking at their financials and saying, hey, they're not going to have enough to cover their losses, you're done.
Really?
They will shut you down.
No way. Okay.
Now, if you are on the cusp, they might give you some extra time to work on it. Okay. But they might lower your rating as a carrier. So instead of like a AAA, you might become a single A. And that can affect your lenders. Because lenders don't want to deal with like C and, you know, stuff like that, lower end carriers. They want to know that their assets are protected. So you have to carry a rating. Yeah, it's a lot.
So it's so interesting. Like, I mean, even something as stupid as, or you think it's as stupid as like painting a wall. There are so many rabbit holes. You know, you talk about paint. You know, there's 1,000 applications of paint. You have the paint that we use on our metal roofs. You have the paint that we have on our windows. You have paint for interior, exterior walls, and each one of those subjects. And this is just one example. Like, it goes so much deeper than we know. And you know, for me, I'm a layperson. You know, just hearing that about insurance, like, you know, there's so many levels to it, and it's.
And then there's levels in insurance as well, and they're looking at that too. Okay. And that's kind of helped me with my banking background. When I looked at a loan, I looked at like how many credit lines you had. What was your credit score? You know, generally people with higher credit scores take care of their financial. They meet those needs. They pay on time. They're not late. They're not delinquent. Right. Kind of that applies now. There's a lot of companies now that pull credit scores. Okay. Or we call it insurance scores. Excuse me, not credit scores. Insurance scores. They also, you know, date of birth, social security number they're asking for. Now with like Citizens, it's a state requirement thing to adhere to the federal level because it's a state funded, you know, insurance. But a lot of them are looking at social security numbers, and they will not, if you can't supply one, they're not giving it to you. One of their things. They want to make sure that, you know, they do the insurance score, how many claims you've had, how many claims have been on the house. And it's another thing that, you think you got it figured out? No. It's a claim on the house this time that they're not going to let go. Or this person's had claims at multiple houses. They could go either way, you know, and we don't get to decide. Right. There's no negotiation.
And that's interesting. And that's why it's so important to have like a great home inspector. Because, I mean, let's just say I bought a house 5 years ago. I didn't have a good inspector, or just a bunch of work that they did, shoddy work from a house flipper, was already concealed. And that was like one of the toughest things, that when my wife and I were looking for my house, was that like she would see these like turnkey beautiful houses, and what I would see is a disaster behind the walls, but I can tell by the level of construction that more than likely there were some issues. Or, you know, I was knocking on doors, tapping my foot on the floor, hollow spots, all kinds of things that I know to look for. So she would see something beautiful and I'm like, absolutely not. And she's like,
right.
But what? And I'm like,
no.
Yeah. Well, and that's the thing, because, you know, that unfortunately a lot of homeowners or home buyers get into a house, they have all these issues. Let's just say they have a water claim that, you know, it's not their fault. They're not bad people that they filed an insurance claim. Let's just say the AC now, you know, fast forward a year or two later, now the AC leaks while they're gone. And say it wasn't a maintenance issue, say it was just like something shoddy that was done before. Now they have 2 strikes on their name. You know, it
water claims are the worst.
Yeah, you know, water claims are terrible. It's just a shame, like, you know, what can happen by not being connected with the right professionals.
Right.
Not having, you know, good information can set you up to where, you know, 10 years later, you're paying the consequences of something you had nothing to do with other than just buying a house later.
Exactly.
So I have a question for you. So vehicles, you have Carfax, you know, our personal credit scores, we have Equifax, Experian, and TransUnion. Okay, awesome.
Look at us.
No, that's it. We're done here. So what is the credit score of a homeowner, like the name for homeowners?
Well, the one thing that they do run generally with your date of birth and your name, and it's really important when you go to somebody and they do your application, is make sure you have your full name. Okay. If it helps, you know, Miami, a lot of people have the same name, middle initials.
Oh God.
You know, date of birth. So you don't want to be confused for somebody else who has a ton of claims, things like that. But it also is really important to have somebody who knows how to navigate this. Exactly. But the question that you asked was, what were the agencies that they use? So it's Clue.
Okay.
Is the one that shows like the auto.
Okay.
Claims. It's the claim. And that's generally with the date of birth. And like I said, the names can be similar. And I think they might even tie that to the social security number sometimes, but rarely.
It's not
and as
always.
far as the credit scores go, you want better pricing? Yeah, credit scores are coming into play. Absolutely.
So your credit score actually has to do with your insurance costs.
Right. Like I was looking at one today. I was preparing some quotes for here. And I was looking, I was like, oh, okay, I'm going to pick excellent. Because I don't know your credit yet because you haven't accepted it. So I'm not running anything at this point. And some of them, it's not like when you're getting a mortgage and it could affect, you know, your credit score. It's a super soft hit. Okay. It's just an indication. They don't see your credit report. They don't know you have like a Sears credit card. Oh, Sears. That dates me. Macy's.
What's Sears? No.
Yeah, right? So they don't see that, but they see the indications of, you know, there's a score with that. And off the top of my head, I can't remember what reporting agency that it's through. But yeah, if you have any issues or things like that, you'll get a letter in the mail that says like too many trade lines open or delinquencies and things like that. And you have to get back with the reporting agency to take care of that. Wow. We don't take care of it at my level or the carrier level. Okay. It's like when you get a mortgage, fix your stuff before you walk through the door.
Wow. That's very interesting. I had no idea that even remotely mattered. And
nobody does.